Hello, welcome to Livesey Business News. For this edition, I'm joined by Tim Livesey and Bob Smeeton, who are the Chief Executive and the Chief Financial Officer of Oriole Resources. Oriole, listed in London on the AIM market capitalisation of, almost 4 million, 3.6 million pounds sterling, a ticker of ORR, and very active in West Africa. I think, Tim, I'm going to come to you first. Oh, no, actually, Bob, I'm going to throw this one to you. Actually, you're the CFO. The interim results were announced this morning. A loss before tax increasing from around 390,000 to 860,000 pounds sterling. What's going on, Bob? Explain that for us, please.
Yeah, sure, Tim. So our numbers before tax are always kind of skewed by this accounting treatment we have to have on Sonala, which is it's a big asset in our balance sheet, but it's denominated in euros. So if the euro goes, depending on which way the euro goes, you either get a profit or a loss. And we just happen to have had a big adverse swing in the first 6 months of this year compared to the first 6 months of last year. So a big chunk of that increase in the loss is just down to this sort of non-cash accounting treatment on Sonala, which I'm not particularly keen on, but unfortunately accounting standards make us do it. From our point of view, I always think it's much better to focus on the administrative expenses, which are actually down 10% year on year. And actually the 520,000 number we've reported is also influenced by a non-cash item. There's this sort of complicated accounting treatment on the director's salary sacrifice for share options, whereby we get quite a big charge, which is a totally non-cash item and gets reversed out in the sort of reserves note. And that in itself in the 6 months was 50k. So if you strip that out, the admin expenses actually dropped by about 20% year on year. So, it's a little bit of, the way the accounts have to be put together under accounting standards. Generally speaking, our costs are going down, largely due to the directors converting salary into shares and share options.
Okay, so the finance director is feeling, I won't say comfortable, but he's happy with what's going on, I suppose. You've also got another research and development tax credit, which regular viewers and investors will know you play that very smartly in regard of your drilling expenditure. But that R&D tax credit this year is significantly less than the previous year. What's happened there, Bob?
Yeah, that's right, Tim. So this is always a year out of sync. So the R&D tax credit reported in these first 6 months actually relates to the full year 2022, and the large credit reported last year actually relates to the field season of 2021. Now, if you remember, in 2021 we started drilling at Bibemi, and we did 3 phases of drilling at Bibemi. And that, really pushes the R&D tax credit up, pushes the exploration spend up. 2022 was a little quieter in that we did 1 phase of drilling at Bibemi, and the CLP, we've had great results from sort of early stage exploration at the CLP, but it's not as expensive. It doesn't necessarily drive the R&D tax credit itself up because it's less expensive. Now, having said that, we'd love to be doing more work. And I think it's been widely reported how sort of difficult the funding for juniors is at the moment across the sector. And this has led us to be sort of more inventive and try different things. So, for example, the initiative we've got to bring project level funding in at the CLP, the Lanstead deal we announced in August, and the opportunistic kind of finding of value that we announced and talked about on Wednesday at Wapuzi, where we've changed the license to limestone. We've just got to try these different things to bring funds in to the company to get on with the fieldwork.
Well, thanks, Bob. Tim, let me come to you now. Bob, you just mentioned Wapuzi. I think people know you as a an explorer, a developer with an enormous central license package for gold. But let's look at Wapoozy. That's quite a departure from the gold focus, Tim. Explain the rationale behind that, please.
It is. It's a departure from gold on that specific license. It's not a corporate strategy to move away from gold. As you remember, we identified some lithium opportunities earlier in the year as well, and we're continuing to work those as well. So the way we like to think is that if a license gives something up which has the potential to add some value, then we're going to chase that value. We don't want to be completely constrained. If there's no gold on the license, it's pretty pointless giving up the license if there's something else there instead. What we found at Wapoozy, this is, if you remember, this is one of the earlier licenses that we started work on back in 2018, one of the original licenses we came in on. And the early work that we'd done there, we did some soil sampling and some rock chipping and a little bit of follow-up trenching from the work that Reservoir Minerals had done previously. And we had identified some gold, but very much smoke rather than a system that seemed to hold together. There was a very low, there was a gold signature, but it was very small. And it's only about 25 kilometers away from Bibemi. So Bibemi, we were having much more success in the large strike length of gold anomalism that we'd identified there. So we put our big focus on gold in that area into Bibemi. We did a little bit of follow-up at Wapoozy and identified and confirmed to ourselves that this was never going to be a deposit that we could deliver on. And rather than falling into the trap of having pet projects and continuing to take more and more samples to try to persuade people there was something there, we said, okay, well, we've reached that point with this license. We either drop it or find some other value from it. And we had a chat with our geologists in country and also one of our partners who happens to have been an industrial mineral specialist with BRGM, the French Geological Survey. And we have a large expanse of marble and limestone on this license. So we did a small sampling program, and pretty soon it became very clear that the quality of the limestone was sufficient for clinker production for cement manufacture. The chemistry of limestones changes a little bit, and if you have the right material in it, or rather if you don't have the wrong material in it, it's pretty easy to identify large tonnages that could be effectively quarried on surface and taken into the cement industry. So to us, this was a route to value. It's very low risk for us, very low capital input. And it was simply a matter of requesting from the ministry to change the commodity definition on the license, which has been done. That's now public on the cadastre system. And then, we have the license is at the renewal stage, so we just need to do that formalization with the President's office. And then we're ready to go out and find some partners to look at Wapoozy as a source of potential clinker for the limestone industry, which is by the way, very lucrative in Cameroon.
The other news was that the Canadian Investment Bank funding is now scheduled for completion in the fourth quarter rather than in the original target, which was the end of June. I mean, guys, are you still confident that money is going to come in?
We are, Tim. We're a little bit disappointed, obviously, by the delays, but we had originally, when approached by this group earlier this year, we'd originally offered, would it be H1, H2, and they were saying no, Q2 will be fine, Q2, Q3, and it's drifted a little bit, which is a bit disappointing. But they are still engaged. We talk to them on a regular basis. Every couple of weeks we have catch up with these guys, and there's a lot of interest coming from behind them and from them. It's always a little bit of a challenge when you're getting funding across the waters, across the pond. But the interest is still there, and we're still confident something's going to come of this. Interestingly, this was a project level funding on the 5 easternmost licenses of the central license package in Cameroon, that large sort of Greater London size area that we have. And this banking group identified the opportunity here at the beginning of this year. We'd been talking to them for a couple of years before that, but they identified it really beginning of this year and requested to come in. But since then, we've had additional interest in this central license package in these 5 eastern licenses. Now, if you remember, we have 8 original licenses there. The 3 westernmost ones are under a requested suspension from us because of access issues. They're on pause. And we've put all our exploration efforts into the 5 eastern licenses. And recently, in addition to this interest from the Canadian investment group, we've actually had some other groups, more mining focused and exploration focused groups, who have showed a lot of interest in the CLP, the central license package, and specifically on the back of the results we've been pulling out of the Bay license in the northeast of that group. So we do have other avenues in parallel to that funding. And if you remember the terms of the original proposal by the Canadian group, they suggested 10% at a project level for $1 million. Well, that values that Eastern package at 10 million, and we're now seeing interest from other people coming in. And obviously, as exploration progresses, the value of that package we expect will rise. So we're confident the geology, everything we've seen at the central licenses has delivered as we expected it to. It does seem to be a corridor of gold mineralization tied between these 2 splays off the central Cameroon shear zone. And it's a significant area. We've got a corridor about 75 kilometers long, about 15 kilometers wide, with multiple sites of anomalous gold within that. So we're confident the money will come through, and we're confident that we also have other avenues for that particular package of licenses to progress exploration on them.
Okay, so thanks for that. But look, elsewhere in the portfolio, can you give us an update on what's going on in Sinala and the Turkish assets? And can I come to you first, Bob, please, for some of that?
Yeah, sure, Tim. I'll talk about Turkey, where there's principally two big things we talk about. The first one being the Muradaya copper gold porphyry system, which is a significant system. When it was priced up originally on its mine plan, it was $400 million worth of gross metal value in that mine plan. And since that time, that's 2019, the copper price has done nothing but go upwards. So it's a very valuable asset. We've got a 1.2% royalty on it. It's progressing through the courts. We're always in a hurry, so maybe not as quick as we like, but it's progressing pretty well. It's getting through a TIA stage. They seem to win every round, and we're hopeful for a positive resolution this year. The other main Turkish asset is this success-based fee that was due to us in 2019 and actually part paid in 2019, but then the debtor stopped paying. It's on a gold asset owed to us by Anadolu in Turkey. It's a very, very strong case. It's taken, the Turkish courts take a long time, and it has taken longer than we would have liked. But we're convinced we'll win it. They part paid it, so why wouldn't we win it? They've clearly accepted the debt, and because of the process we followed, which has been by the book, the debt's actually increased. We've got interest, we've got a penalty accrued on it. We've got court costs and everything. So, eventually they'll both come in. We see them both as sources of value somewhere down the line.
Thanks for that, Bob. May I now come to you, Tim?
The key thing on Turkey is, in both cases, they are court processes, but they are moving forward. The EIA it's step by step moving forward, and there's a discussion around the location of the tailings dam. It goes back to the design, it gets redesigned, it gets moved, it goes back, that gets passed, and then there's a discussion on the next problem. And so it is a process, and I mean, we know this from mine permitting worldwide. It's not something that happens in the space of a month. It does take months and years to resolve these issues sometimes. And as Bob mentioned, the value of this, the metals value of this is in excess of $400 million, and more now with the rising copper price. And it's certainly worth our while. We're basically, it's not costing us anything to sit and watch these processes go on. It's worth our while to let them come to fruition to increase the value of our royalty there. In Sonala, in Senegal, so this is the project which originally was an earn-in by IAMGOLD onto our license, and IAMGOLD sold their entire position in West Africa, exploration and development project position, earlier this year to Managem, which is a Moroccan-based mining group. It's a quasi-statal mining group out of Morocco. Now, Managem are a very successful and very competent mining group. Their focus in taking this package of assets, which was effectively 4 different areas, the main focus for them was obviously the Boto mine development project in Senegal, which is right next door to our Sonala license. And so obviously they have been really focused, their management team have been really focused on pushing that forward. That was the jewel in the crown of this package. Its feasibility study was already completed. It's just a matter of getting permitting, and then this thing can go through into production and be a producing mine. So the management at Managem have been focused on that. But in the background, they took on the majority of the local exploration staff that used to be with IAMGOLD. So there's been continuity of exploration on our license. We are expecting a drill program to come up in this next quarter as we head towards the fourth quarter of the year. They indicated that Managem indicated at the beginning of the program that of their takeover of this program that they would be doing some drilling to run them up to the end of the option period. Just a brief summary on the deal itself. The original deal, which is the deal which Managem have now inherited, was an $8 million spend. It was $4 million over 4 years, and then another $4 million over 2 years. Now that second $4 million, the end date of that option is February next year. Now they are currently underspent on that, so they would reach, if they completed the $8 million spend, they would reach a 70% equity position in that license. If they underspend on it and they still want 70%, they can give us the balance in cash, whatever's they haven't spent in the ground, or they can elect to stay at a smaller percentage. Currently, we believe they're over 60% equity by the spend they've done, but they've not reached the full 70% yet. So we actually have some meetings planned. We were in discussions with Managem, or rather, they approached us beginning of this month, beginning of September, to get together in early October and talk about the next steps. And obviously, it's key in our minds as to what's going to happen after February next year. Are they going to want to continue the exploration beyond that? What do they want to do with their position in this license? And we have in the past, and we continue to keep in touch with other parties who may be interested in either our position, our minority role in this. We have, a backstop is sort of 30% ownership on this, diluting down to royalty, with a potential ROFR if Managem was interested in selling their position. We could either partner up with them and sell collectively, or we could activate the ROFR if that was appropriate. So we have groups that are interested in the license as a whole from that region, and I'm sure that with Managem we'll be able to reach a good solution for the license, whether it's to go forward with them, to go forward with a third party, whatever that happens to be. Ultimately, there's a lot of value tied in this license. There's nearly $20 million being spent on it. It's had a lot of great success most recently at Faray, the prospect in the north of the license, but not forgetting, Medina Barfay in the south is very, very close to the Boto project, which Managem are now going to be putting into production. So a lot going on there. As with Turkey, we're free carried in Senegal. We don't have any costs there. Managem are, they're carrying responsibility for the investment up to the end of the option period. So it's yet again a chunk of value in the company that's not reflected in our share price, and that's just the state of the markets at the moment, unfortunately.
Tim, Bob, thank you very much for that update, and we look forward to you coming back on Blytheberry Business News and giving us further information as you progress all the assets. That's it from this edition of Blytheberry Business News. Thanks for watching.